Deven Choksey joins us, Managing Director with Deven Choksey Securities. Deven, what do you want to start with? Political wrinkles in Europe, strong numbers from TCS, or yesterday's late sell-off?
Nikunj, good morning. Well, I think the current situation in the global marketplace is, I think, quite uncertain, because most of the players in the markets are basically operating markets on trading basis, and I think their behavioral pattern is very difficult to predict at the same time. Whatever we have seen in last 2 days, that is on Friday and on Monday, a sharp sell-off. I think one of the things which is coming out very clearly out of that, and I think after having discussion with some of the players FI side, it's coming out clearly that I think those people who exited the Indian market in hurry, they are the ones I think who have got feared out of the GAR related implementation issues, and that is where I think they pulled out the money, and that is the consequential impact I think on the rupee as well. So if one has to take that particular thing as not a permanent kind of a situation, one could say that I think this is relatively I think a shorter lived situation in which the market has had the pressure because of the quick exit of some of the ETFs from the system and subsequent fall of rupee. To my mind, I think rupee, if it slips further and it goes into 53-54 range, probably from that level onwards you would see new money coming into the system for trading purpose. So I'm relatively, I think, more confident on one side that the fall which has happened is because of the expiry which is happening in this month, and the hurry because of that I think to exit the market by the ETF. And at the same time I think if the rupee is giving opportunity like this, probably the market would stage a comeback. Whether it would have a comeback from 5100 levels or it would have come back I think before 5100, it may not go all the way down to 5100, but I think it's difficult to predict. I would think that 5150 and 5400 would be the range in which probably market will consolidate for now, and after a while I think it would probably start coming back above 5400. So relatively confident that this fall has not been I think something which is fundamentally driven. It is more driven out of the panic by those people who wanted to withdraw money out of the system.
Deven, what did you make of TCS's impressive performance, and more importantly, now that they've put to rest fears that the industry is not really growing?
Yes, I think against all expectations, the result has been a positive surprise. And even in the BFSI space, I think where we had concern, I think they have probably performed well. So from that point of view, if you look at it, I think they are showing the path as far as the industry is concerned, and they're leading the path at this point of time. There is no reason for me to say that yes, I think this company would remain in that particular bracket wherein the investor would have more confidence, and their commentary also suggests the positiveness. So from that point of view, I would stay with the TCS for the time being, though prior to result I think I had inclination that this particular premium valuation of this particular stock might not remain and probably it may come under attack. But with the positive commentary coming up, I think it is suggesting that it will probably may not go up dramatically, but at the same time it will remain in positive territory hereafter.
Deven, everyone knows that you are the most outspoken bull on Reliance, but given the way how Reliance has clearly indicated that for them all the three businesses are struggling in the near term, which is refining, the E&P business and the petrochemical business, do you think in the near term Reliance is a sell?
Yeah, Nikunj, in the near term there are no positive triggers. I totally agree. Even I think the post result in the analyst meet, the management has indicated about improvements in the subsequent part of this financial year, that is in the second half, particularly in the petchem segment where the new capacities will come into production, and in the second half you may have I think higher production to talk about. At the same time on E&P side they have talked about continuing with the capex program and exploration process, and they are hopeful that government at some point of time would reconcile their policy on the pricing front, but there are no immediate triggers. I totally agree with that. The only silver lining out here would be the refining business. The refining business has had a worse quarter in the last quarter, and probably in that quarter they could manage to meet the Singapore GRM. I'm not expecting a premium over Singapore GRM because of the heavy lean towards the diesel and the jet fuel as far as Reliance's refinery is concerned, where the prices are under pressure. But I do believe that in a situation where they have met with the kind of a challenge in the last quarter, they are probably in a much better position now to change the product mix and probably I think generate little better GRM than what it was in last quarter. But all said and done, it is not an immediate trigger. Probably I think the stock would continue to perform on the profit front. I think the profit base would remain at this level or maybe a little higher. But certainly I think no immediate trigger on an operating profit side, I think, where they can probably show a record jump. Unless we get some inorganic way of growth, I think, coming into the fold for Reliance. On an organic basis, I think the growth would remain muted, as I can also see from the current numbers.
Given the way how the benchmark or reserve price according to TRAI recommendation for 2G auction has been fixed at about 13 times higher than 2008 reserve price, do you think telecom stocks now are in a structural bear market?
Well, I think one needs to study the TRAI's recommendation a little bit more in detail. What they have done is they redefined the spectrum. I think they are saying that 1800 megahertz of spectrum could even accommodate 4G kind of services. And what they are suggesting that I think if you end up buying 1800 megahertz of spectrum at a higher price in which you offer 4G services, then effectively you are paying less cost compared to what you have been paying earlier. That is what they are claiming, and we need to validate that part of the claim by studying the entire internals of this particular mechanism that they are suggesting. But yes, on the face of it, if you compare on a likewise basis from 2G price that earlier people paid and the price that they have to pay for the current spectrum, which is considered only as a 2G, then it is certainly on a higher side. But if you don't consider the current spectrum as only 2G, but it is also a 4G spectrum which they can roll out, then in such case I think probably the price may not be seen as high. At the same time, I think there is a payment flexibility that they have proposed herein, wherein they are suggesting that in the first year you pay and then you have 2 years of moratorium period, which again suggests that the telcos may have relatively a breathing period going forward for implementation of the new spectrum. So we'll have to study, Nikunj, this particular part of it, I think, in greater detail before which we can make a comment. On an apple-to-apple basis on the paper, yes, it is appearing negative, but I think the internals are suggesting that there may not be as much negative. So let's study and then react on that part.
Leave us with one large cap, one mid cap and one small cap idea where you are ready to invest your personal money.
Yes, Nikunj, I think as talked earlier, my larger amount of confidence is coming with State Bank of India within the large cap space, where I think the fundamentals of the company are likely to improve, and as we heard the chairman, I think it is validating this viewpoint. So without going into details about I think the growth, I would feel that I think with the valuation at which State Bank of India currently available, I don't see I think too much of a downside in this stock. On the contrary, I think this stock holds the potential of at least giving 25 to 30% return over next 9 to 12 months time. So this is one company on the large cap side. In the mid-cap space, Sterlite Technologies, with the strong position now emerging for them on aluminum conductor side, as well as I think the power transmission side and fiber optic side, I think is remaining I think a good choice to buy into. This year should be I think a revival year for Sterlite Technology, and we should be seeing I think successive improvement in the quarterly workings of this company. So this is one company which we like within the mid-cap space. And I think if one wants to further buy into any of the infrastructure companies, it would be IDFC, because of the strong portfolio, good valuation, and at the same time, I think revival in the infrastructure activity should help them get, I think, a better value proposition coming out of the assets that they are holding. So these three stocks on the recommendation side.